Agile portfolios and why they give you the edge. A key differentiator of smart values is the dynamic construction of portfolios that make them agile. Now, what do I mean by dynamic construction of portfolios? Well, this is the way it goes. Traditionally, investment pouches are created on a specific date and rebalanced at periodic intervals. These are static portfolios and are identical for all subscribers. And rebalance occurs across all users. In contrast, Smart Values does not rely on static pouches or portfolios. Instead, it employs an algorithm that constructs a fresh portfolio daily from a predefined universe of stocks. While the thematic or the universe constraints remain the same, the algorithm responds to changes in the momentum profile of stocks to create a portfolio or pouch that reflects the most current market dynamics. As a result, pouches or portfolios created on consecutive days may be similar, but over time, as market conditions evolve, the portfolios will naturally diverse. This ongoing adaptation is driven by shifts in momentum, ensuring that each user receives a customized basket aligned with the market conditions at the time of his subscription and not a portfolio that is the same for everybody. This dynamic nature ensures that every subscriber benefits from the portfolio that is most relevant to the market conditions at the time of his subscription, rather than rely on a static snapshot taken at an earlier time. The portfolio, therefore, is designed for the duration that the subscriber is in the market and not designed for a static period. We can illustrate what I just talked about through a live example um, taken from our portal. We created a portfolio in November 2023, and we measured the performance of that particular portfolio for the month of June. Um, and then we created a dynamic agile portfolio on 30th of May and measured the performance of that particular portfolio for the month of June. And the results were fairly interesting. Now, when we looked at the portfolio that we created in November 2023 and compared it with the Agile portfolio that was created in May 2025, we found that out of the 20 stocks, it was a 20 stock portfolio. Out of the 20 stocks, 10 stocks were different. Remember, we are using the same universe to create these portfolios. So the stocks that are there in the portfolio are being selected from the same universe of stocks. And in this particular case, it was essentially an universe of manufacturing and industrial companies. So from the first portfolio, there were 10 stocks that were omitted, and I will just take you through what those 10 stocks were. They were Cochin Shipyard, Torrent Power, Oil India, Mahindra and Mahindra, Tribeni Turbine, Vedanta Limited, Eicher Motors, JSW Infrastructure, Hindustan Aeronautics, and Aegis Logistics. So since 10 stocks went out of the 20 stock portfolio, that was created in November of 2023. For the Agile portfolio that was created in May 2025, 10 stocks had to come in. And these 10 stocks are APL Apollo, Aster DM Healthcare, Coforge, Dalmia Bharat, JK Cement, Macrotech Developers, Narayana Riddaloy, Persistent Systems, Ramco Cements, and Shree Cements. So what is the difference between the two in terms of its construction? The universe is the same. So the portfolio that we took from November and which is running till now essentially includes stocks that were aligned to the market conditions in November 2023. And of course, there have been rebalances and so on. But essentially, the momentum profile related to 2 years earlier. The agile portfolio, on the other hand, um, is aligned to the market momentum and the market configuration in May of 2025. And as we saw, this resulted in 10 changes. 10 stocks remained the same, but 10 stocks changed. It's a bit like cars. You have a 2023 model for a car and you have a 2025 model for a car. So let's say that for this particular portfolio, the earlier portfolio was the 2023 version of this portfolio, and the agile portfolio is the 2025 version of this portfolio. Now, then we looked at the performance of each of these portfolios for the month of June. June was a good month overall. So the performance of the earlier original portfolio that was created in November 2023 was about 4% plus, whereas the performance of the agile portfolio was 7% plus. So there was a clear difference of about 3% in the agile portfolio. While this difference may vary, overall, what our research has shown is that if you create agile portfolios which take into account changes in momentum, changes in market conditions, the returns tend to be slightly better. So to sum up, at Smart Values, we do things differently. Our proprietary algorithms build a new pouch every single day from a specified stock universe. While the underlying theme or universe remains the same, the composition of the portfolio adapts daily based on the real-time momentum signals from the market. That means that there are no more one-size-fit-all baskets. The portfolios are created on the subscription date and is current for the subscriber, and therefore there are no outdated allocations. Number two, our pouches of portfolios are momentum driven and also market aligned. As market conditions shift, so do the momentum profiles of individual stocks. Our algorithm captures these shifts, ensuring that each new portfolio is aligned with the latest data. Even if portfolios from consecutive days are similar, they will gradually evolve over time and keep your investments dynamic and relevant. We saw this in the live example that we had talked about earlier, where over a period of 1.5 years, that is November of 2023 to May of 2025, 10 stocks out of a 20 stock portfolio were replaced, which resulted in better returns. Point number three, every portfolio or pouch is personalized for the subscriber. When you subscribe to a Smart Values pouch, you get the version of the pouch that is aligned with the market on that particular day. This ensures that your entry point is optimized no matter when you join. Smart Values gives you a better way to invest. They're dynamic, responsive, and personalized. They are built for current markets and they're built for you.